Unitedhealth Group, stock ticker UNH, just announced a big dividend increase. If we come down here, we can see this was an 11.7% increase to their prior dividend of $1.88, and the dividend hike pushed it all the way up to $2.10 per share. And we can see this company over the past year up about 1.78%, so it's traded pretty flat, but we can see there has been some volatility over the past few months, and in fact it actually hit its 52-week low back in April when it was trading at about $436.38 per share, and I actually added some shares to my personal portfolio during the month of April. Now, what is it about this company that allows them to be able to increase their dividend payments at a rate as high as 11.7%? Well, let's go ahead and jump into the dividend breakdown sheet. And again, like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. But let's go ahead and come up here and plug in UNH and hit enter. And we can see all this data will automatically load in thanks to the ticker data add-on. Now the starting yield for this company, a little bit lower, sitting at about 1.7%. But again, what's amazing about this company is the dividend growth. Look at that 10-year dividend CAGR, sitting at 19.6%. That is explosive dividend growth. We can see those dividend payments in 2013 were sitting at just $1.05. But if you look at it in 2023, it jumped all the way up to $7.29. And with the most recent dividend increase, it's now sitting at $8.40. So again, those dividend payments continue to climb higher and higher. So again, what is it that allows them to increase their dividend payments at such a high rate? Well, we can see free cash flow for this company has exploded over the past decade. In 2013, it's about $5.8 billion, and in 2023, over $25.6 billion. So that 10-year free cash flow CAGR sitting close to about 16%, and the 5-year about 13.47%. So again, pretty phenomenal free cash flow growth over the past decade. And here's what's good about this. When a company is rapidly increasing dividends, but also rapidly increasing free cash flow, we can see that the free cash flow payout ratio will stay in a healthy range. And in fact, for UNH over the past decade, it's stayed below 30%. This means the company still has around 70 or 75% of its free cash flow left to do other things like buy back shares or reinvest back into the business. And in turn, that allows them to continue to generate high amounts of free cash flow. If we jump over to the stock screener sheet, plug in UNH and hit enter, again, we can see this data will automatically load in. And really the key metrics that we're looking at here are a thing of beauty. This is pretty much exactly what I'm looking for when looking for stocks that I want to add to my personal portfolio. Yes, everything is growing, but the consistency and the predictability is something else we have to take into consideration. Year over year, we're seeing earnings per share growth, we're seeing revenue per share growth, we're seeing free cash flow per share growth. And something else the company has been doing, although not at necessarily a high rate, is they are buying back shares. We can see in 2013, share outstanding was a little bit over 1 billion, and in 2023, about 928 million. So yes, year over year, they are buying back a few shares as well. The debt to assets ratio is in a very healthy range, so most of their debt is covered by their assets. And then return on invested capital is very steady, very predictable. It's sitting close to about 15% over the past 7 or 8 years. And then of course, if we jump over to the profitability sheet, yes, revenues are growing, net income is growing, but something else I love to see is consistent gross profit ratios. We can see this hasn't fluctuated too much over the past decade, which is something that I really like, and the 10-year average gross profit ratio sitting at about 23.92, and in 2023 is about 24.5, which is actually a little bit above that 10-year average. So again, yes, I love the growth that this company is seeing, but I love the predictability and the stability that we've seen. There aren't huge fluctuations in things like earnings per share or free cash flow per share, and this allows the company to very predictably grow their dividend payments year over year at a high rate. So by owning this company, I can continue to feel confident that although they have a lower starting dividend yield, I will consistently see high levels of dividend growth. This will be very predictable and very stable. And really for someone like me who has a long-term goal of being able to one day live off dividends, it makes it a good contender for my personal portfolio. So when I saw the news of an 11.7% increase to the dividend payments, this did not catch me by surprise whatsoever. It was to be completely expected, really. So obviously nobody knows short term what the stock price will do, but if it continues to go lower or get close to that range where I previously bought in, I would happily add more shares to my portfolio. So go ahead and let me know in the comments down below what you think of Unitedhealth Group, stock ticker UNH, if you plan on buying or selling or even staying away. And like always, if you'd like to be able to download any of my spreadsheets, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.